Hello, it's Iino. Today, I would like to broadcast about the theme, European recession will lower demand and freight rates for marine transportation. As 2023 begins, shippers on the Asia-Europe route will find themselves in the opposite position from early 2022, with an overabundance of vessel space and plummeting spot freight rates. However, the backdrop to this improved shipping environment is not entirely positive, as the European economy is in recession and consumers are battling a worsening cost of living crisis. High inventory levels are making it difficult to reduce inventories due to weak consumer spending, and European imports are expected to decline at least through the first quarter of 2023. Let's look back at the year 2022. Spot freight rates between Asia and Europe were at record highs, and shipping capacity was so tight that shippers were charging guaranteed space premiums of several $1,000s on top of already rising rates. Major Nordic hub ports suffered from chronic congestion, effectively shrinking available mainline space, and shippers placed import orders faster and in larger quantities ahead of schedule. As a result, warehouses across Europe were filled with this cargo, with peak demand no longer seen after the summer months and the traditional demand surge ahead of China's National Day in October. Rates for 2022 peaked in the first week of January and declined steadily throughout the year, falling below the long-term contract rates for Asia and Northern Europe in August. What will happen in 2023? It is said that shipping lines will experience an oversupply of shipping capacity as congestion in Nordic ports eases, mainline space is released to the market, and runaway inflation and a Europe-wide recession depress demand for consumer goods. CEO of shipping companies, who have reported very strong quarterly results, even as freight rates fall throughout 2022, insist that they will aggressively match demand with space to maintain profitability. According to Sea Intelligence data, a total of 824,000 TEU of shipping capacity will be reduced in the last 4 months of the year by the end of 2022. This figure is roughly equivalent to reducing all available shipping capacity in a month's trade. It had already been intentionally reduced by that much. In preparation for the impact of new IMO environmental regulations that will take effect in early 2023, shipping lines will be forced to sail more slowly, and some may be scrapped altogether. So the supply is being controlled. Demand to Europe is also basically expected to decrease due to the economic slowdown caused by inflation and high energy prices. As in North America, there are still excess inventories, and transportation demand will not grow unless these inventories are reduced. The article stated that shipping companies had already controlled shipping volumes from September to December 2022. The impact may have been limited, as prices continued to fall even after the shipping volume was controlled. The same thing is happening in Europe, as well as North America. Since 2020, when the corona pandemic occurred, there was a simultaneous increase in nesting demand, and port congestion was occurring around the world, so it seems that when the price drops, it also drops at the same time. I will continue to monitor the trend.